Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, like all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at that disclaimer, and let's welcome Dimitri Pargamonic to the stage. How you doing, Dima?
Hey, good morning, Will. How are you?
Great. So what are we looking at today? Post-earnings drift?
Yeah, let me share my screen here. And what we'll cover today is the stock movements, historical stock movements between earnings periods. So this will take out the actual earnings day moves. So when a stock, reports earnings, it will adjust right after earnings to the news that day. Where investors get to review management's comments, how the company performed in the last quarter, the stock reprices, and then we're going to look at that period between the end of the earnings and the next earnings, right before the next earnings announcement. What does the stock tend to do to get insights how a particular stock tends to move? The range of the movements. Does it tend to move higher or lower? If there's any correlation between the earnings reaction and the drift afterwards. So that's what we're going to take a look at right now to see how we could get some insights. And let's just take a stop here. I'm going to type in, let's look at Netflix. So type Netflix. This will take us to Netflix main summary page. And on the left-hand side, we have a menu. Let's click on earnings. And we're going to go down to post earnings drift. Click on that. And this will create us this will take us to a page with that report. I'm going to click on this menu to minimize it and expand our screen. And up here, we have some summary statistics. We have a graph here, and then we have a data table below of those post earnings drift. And here, really quickly, I'm just going to go over some of these data elements. So far, the Netflix from the last, after it reported earnings, the last earnings, it has drifted down 2.7%. So keep in mind, this doesn't include the actual earnings moves. We take that out and see what happens after. So far, Netflix is down 2.7% from its last earnings. And on average, we could see if we took the average post-earnings drift, for the whole period, let's say, 3 months, and averaged out, the positive, the negative drifts, on average, it moved up 13%. And the average move up or down between that period, so let's say those 3 months excluding earnings, is up or down 16.8%. Okay, or standard deviation drift is 16.8% up or down. So this gives us a sense of what it tended to do. On average, the range of the moves, so standard deviation move is 16.8%, and so far we're down 2.7%, so we're not outside of that one standard deviation range, but so far it's more to the downside than upside. And this here shows us the historical post earnings drifts. So if it was down, it would be in the red. So for example, down here, we see that on October 18th in 2023, pre-earnings, the stock was down 20% in that period from the last earnings announcement to right before October, the next earnings announcement. Okay. Most of them look like they're in the green. So most of the time here, we could see that that was up between earnings periods. The blue bar, this shows the actual earnings effect. So what did the stock do after reporting earnings? So over here, we could see that in this blue bar here, that the stock was up 16%. So following a 20% drop pre-earnings, the stock was up 16% after reporting earnings. And here it looks like most of the time in the blue, it was up, maybe down. If we just looking at, just trying to eyeball any kind of data points that stick out, it looks like the following a very large drift between earnings, like over here, up 47%. After reporting earnings, the stock was down 8.4%, but following a very big down drift, 20%, the stock was up 16% after reporting earnings. So maybe when we get a very large drift, it could be even good news or bad news, overpriced or fully priced in, that after it reports earnings, it seems like it moves in that opposite direction. Just like over here, we had a 29% post-earnings drift. After reporting earnings, you could see stock was down 5.1%. So maybe something, we could go look to see what the earnings were, but potentially without digging deeper into it to see, what the actual earnings were, expectations, and so forth. It looks like if we seen historically a big move between earnings, the earnings impact is in the opposite direction. Okay. So let's come down here, and now we have a data table. These are summary statistics, and then these are the data points that we're referencing, the supporting data. So these are the different earnings announcements, the price effect, and the drift between each earnings. So let's take a look at the summary stats here. Currently, this is where we're at. Stock is down 2.7%. The range so far, Netflix probably just reported earnings, right? Like, let me see, July 17th. So we're, very recently reported earnings, but so far we're down 2.7%. Keep in mind, this does not include that initial earnings move, right? We look at the initial earnings move, and then we start the day out. Down 2.7%. The range between so far was from the close after earnings, were up as much as 2.3% and down as much as 3%. So it's not a wide range so far, but we've only been a couple days. So let's compare that to the averages. So on average, post-earnings drift is up 13%. 83% of the historical observations, the post-earnings drift was higher, 17% lower. Right? That's taken in that full 3-month range. The average to the high and average to the low. Right? So we're looking at these averages. So the average to the high is up 21%. The average to the low is down 6.3%. So historically, the post-earnings drift has had a positive lean or positive bias. Okay, so the skew, right? Look, we have a positive skew historically in Netflix based on the data items that we are analyzing. As far as the average movements, well, we could take all the movements. So these are all the post-drift movements. Okay, if we converted them all to positive moves and took the average to see the magnitude of the moves, so even the down moves, what we're interested in is the magnitude. So we're going to take the absolute average, and here we see that's up or down 16.9%. Okay, with a standard deviation of 16.8%. The biggest post-earnings move was 47.8%. The lowest was 2%. Okay, the highest, the drift to the high, the biggest drift to the high was up 50%. To the low, down 21%. So if we looked at all our historical range, so these are the drift to the high, okay, and these are to the low. So we could see here that we had one that after reporting on April 18th, right, the stock was up 47%, but got as high as up to 50%. Okay, and here to the biggest move to the downside post-drift was 21%. All right, and I'll remind you guys, keep in mind this excludes that one-day earnings moves. Okay, so this gives us a sense of the historical extreme moves to the high and to the low, which looks pretty, Netflix could move a lot even without any earnings announcements in between. We could see that it's been up as much as 50%. That could have been other news in between. We don't know, we'd have to check, but it's been up as much as 50% in that 3-month period, and is down as much as 21% in that 3-month period historically. So it could still have pretty large moves in between. And oh, sorry, I was looking here. The median move. So this median move takes these historical drifts and says if we sorted them from high to low and went right into the middle, chopped it up in half of the observations were above this, half were below this, was plus 13%, which is right where the average is. So we could see that that it wasn't just one big outlier pulling all our data up, that it does tend to have a positive skew. Okay, so it tends to have a positive skew in between earnings based on those historical data points. These are the max and min moves to the end. These are the max moves to the high, biggest move to the low. So really, another thing here we could take a look at is we could compare if a down move, for example, on July 19th, does the drift follow through and the stock continues lower or rebounds? So like, for example, here, the move was down on April 18th, down 3% after reporting earnings. So then we could say, okay, after April 18th, what did the stock do from that to the next earnings? And you can see here it was up 47%. Then it reported earnings, it was down 8.4%. After that, then the down move did follow through, so it was down 8.4%. Next 3 months, it was down an additional 20%. So we don't have a lot of down moves here to look at. Well, maybe here a couple more, but these down moves were followed by up moves. This down move was followed by up moves. So there's no like clear follow through here with down moves. It looks like we had probably, even with, well, I would say actually more of the down moves, the following that first down move, the next 3 months were up moves. And if we looked at maybe some of the, bigger up moves, let's find, look, here's a 16%. After that 16%, we gained another 22%. Here's up 10%, we gained another 12%. Here's up 11%, gained a 13%. So even when if we just took the biggest up moves, it looks like, the stock continued to follow through and continued higher the next 3 months. So it added on. So up 13%, the next 3 months, it added another 15.9%. Here, up 8.5%, the next 3 months, it declined 2.6%. Here, up 16%, the next 3 months, it gained another 22%, up 10.7% here, next 3 months, again, 12.1%. So these are just some quick insights to see how the Netflix stock behaved post earnings announcement. Okay, so compare the earnings announcement, stock reaction, and what did the stock tend to do post earnings impact. All right, well, I covered pretty much this tool here. I'm going to throw it back to you.
All right, great job, D. As always, very interesting look at Netflix, a tool that you can use with all the stocks. Interesting around earnings to see how the response is 3 months out to the share price. Great job as always, D.
Thanks everyone for joining, and stay safe out there. Hope to see you guys tomorrow.
All right, we'll see you tomorrow, D. Thanks for everything. Bye. Hey everyone, thanks for coming in for today's Market Chameleon webinar series. Please like and follow us on all the social platforms. Thumbs up if you're on YouTube is always appreciated. Everyone have a great day, and we will see you tomorrow.